What's going on, you guys? Welcome back to another incredible video by Real FX. In this video we are going to be talking about liquidity, and if that sounds like something that you're interested in, stick around till the end of the video and don't forget to give this video a thumbs up. Now let's talk about liquidity. Now the first thing that I want us to look at when we're talking about liquidity is external and internal liquidity. Okay, so we're going to talk about external and internal liquidity. External and internal liquidity. We're going to talk about external and internal liquidity. Okay, so before we dive into external and internal liquidity, let's remind ourselves of the market structure that we expect in forex trading, or the kind of market structure that you're going to come across in an upward trend or a downward trend. Now I'm going to throw an example of an upward trend and also a downward trend. So this here is a downward trend, and again here we are having an upward trend. Now we are going to talk about internal and external liquidity based on these two examples that we have on the chart. Okay, so we know that this is a downward trend because we are having lower highs and lower lows. So we're having lower highs and lower lows, and we know that this is an upward trend because we're having higher highs and higher lows. Now we can see that the market continues to break structure to the downside like this. Again a breakout of structure over here, again a breakout of structure over here, and another breakout of structure to the upside like this. Now we can go ahead and label this so that we know what we are talking about. So that's a breakout of structure. This one is also a breakout of structure. This one is also a breakout of structure. This one is also a breakout of structure, and this one is also a breakout of structure. Okay, so this is a downward trend, and this one over here is an upward trend. Now we are going to label our internal and external liquidity. Okay, we are going to label our internal and external liquidity. That's our breakout of structure. Now this is, let's label this is our downtrend. This is our downtrend, and over here we have our, this is our uptrend. Here we are having our uptrend. Now when we talk about external liquidity, this is liquidity that is resting above a high or a low that is protected, or a low that we do not expect to see it being taken out of the market. So we expect the market to respect this low and not take it out. Okay, for example, if we are having this kind of a structure like this, and we say that this is a significant high, we don't expect the market to take this high out. Or if we're having this kind of a structure, then we do not expect the market to take out this low. We do not expect the market to take out this low over here. Okay, So this is going to be our significant low, this is going to be our significant high. Now external liquidity is found on our significant low and also our significant high. So which high is significant and which low is significant? Well, on a downward trend, the highs are significant. So we are talking about this highs over here. This high over here is a significant high, and this high over here is a significant high, and also this high over here is a significant high. Now because these are significant highs, so we can say that this is significant, this is a significant high, that is a significant high, this is also a significant high, and again this is a significant high. So these highs are significant because the market is towards the downside, so we do not expect the market to take out these highs over here. Right now, when the market creates this high over here and then takes out this low, now this one becomes a protected high. So this becomes a protected high. So this is also a protected, this is also a protected high. So this high is protected, and this one over here is also protected. This one is significant, but it's not yet protected. We expect the market to push to the upside a bit and then break structure, and then when the market breaks structure over here, we are going to label this as our break out of structure. And once we label that as our break out of structure, we are going to have this as our significant high. So this is going to be our significant high, this is going to be our significant high, and this however now becomes our protected high. So I hope you guys can get it now. So that becomes our protected high. Now liquidity is always resting above the highs and the lows that are being formed in the market, but in this kind of a scenario where we are in a downward trend, external liquidity is going to be expected on our significant highs. So this simply means that we have liquidity resting above this high, resting above this high, resting above this high, and also resting above this high. This simply means that this is our external liquidity. Okay, so that is our external liquidity. The same thing is going to be taking place on the upward trend. As you can see, we are breaking structure to the upside. That simply means the lows are significant. So this low over here, this low here is a significant low. Let's talk about this low over here. Let's talk about this low is a significant low, and again this low over here is going to be a significant low. And if the market continues to form another low like this, a higher low, that is also going to be a significant low. So that is going to be a significant low. So the market will break structure over here and then create a significant low over here. That is a significant low. So let's label it also significant, and this one is also significant. Now let's talk about our protected lows. This one is going to be protected, this one is going to be protected, but this time it's not a low, it's a high. It's not a high, actually it's a low. So this is going to be our protected low, and this one over here is going to be our protected low. But for this one to be classified as a protected low, the market now has to come push to the downside, create a new high, and then we can say that now we are having a significant low. We are now having a significant low like this. We're having a significant low and also a protected low on this area. Okay, so we are now having a protected low and we also have a significant low. Now let's talk about, so the same thing is going to apply here. Before we talk about internal liquidity, the same thing is going to apply. This is where we're going to be having our external liquidity. Here we also have our external liquidity. Here we also have our external liquidity. Now immediately when an external liquidity is taken out, we know that now we are in a different direction in the market. So if the market pushes to the downside and then it takes out this liquidity, we know that now we are in a different direction of the market. But that's something that we're gonna talk about on a different video. Now let's continue. Now let's talk about internal liquidity. Internal liquidity is going to be resting on the lows or the highs depending on the structure. Okay, now since we said on a downward trend the highs are significant, it simply means that the lows are not that much significant, hence they are always being taken out. So as you can see, the market took this low out, created a breakout of structure, took this low out, created a breakout of structure, and it continued to take out this low over here, and then it also created a breakout of structure. Okay, now because of this breakout of structure to the downside, we can say we have internal liquidity resting below these lows. We are having internal liquidity resting below these lows. So the idea over here is that the market always runs out the internal liquidity. So the market always runs out the internal liquidity. So the same thing applies on an upward trend. The highs are always being taken out. So on the highs we are having internal liquidity. So the market is always running out these highs over here. So the market is always running out these highs. So these highs also draw in some liquidity. Okay, so the market wants to take out these highs and then push to the downside, take out the high, reverse to the downside, take out the high, and then reverse to the downside. Okay, so that's the concept of external and internal liquidity. Okay guys, now let's look at what we just talked about on a real chart. Now the first thing we're going to do is to map out structure on our chart. We're going to identify our highs and our lows and our breakout of structure, and then finally we're going to identify our internal liquidity, our protected lows and highs, and also our external liquidity. Now as you can see, we can start over here. This here is a high and this is a low and a higher high. So already we are having an indication of an upward trend. Now this over here is going to be a break out of structure. That's a break out of structure, and again here we are having another break out of structure. That's a break out of structure. Now this simply means that this is our new high and this is our low. Okay, so we can go ahead and label this again as our break out of structure. Now we move on. As you can see, this is the high that must be taken out. So the market takes out that high around this area over here. So this is going to be our break out of structure, even though it took some serious time over here. This is our break out of structure. That is our break out of structure. And then after our break out of structure, the market formed this high over here. Let's label this. This is our break out of structure. So far this is what we are having on the market. a breakout of structure here, breakout of structure there, and also a breakout of structure over here, and again another breakout of structure over here. We can all see that, and again a breakout of structure over here. Right now, that simply means that this is a high, this is going to be the low, this is going to be the high, this is going to be the low, and again our breakout of structure over here, shifting our high to be over here, and our low, again another high being created and a low being created. Now this simply means this is now our new breakout of structure. Let's label this as a breakout of structure and a breakout of structure. So I'm not going to dive into what validates a breakout of structure. Those are things that we teach in the mentorship, but that is a breakout of structure, and this one is also a breakout of structure. So if you want to learn more about SMC concepts and the strategy that we use, there is a link in description. It's gonna take you to our WhatsApp and you can get in contact with us. And again, we have a breakout of structure right around this area. So we also have another breakout of structure around this area. So that's a high, a low, and a high. So this is a breakout of structure. This is another breakout of structure. So now that we have labeled our structure, let's talk about our lows, our significant lows. As you can see here, we are having a significant low. Then here we also having another significant low. Remember, it's an upward trend, so the lows are going to be significant. Okay, so that's a significant low, and we also have another significant low over here. Now let's mark out our other low. This is also another significant low, and again another significant low that we're having over here, and another significant low that we are having over there. So this is significant. So this is significant low. This is also a significant low, and this is also a significant low that we missed over here, and this is also a significant low that we have over here, and we have a significant low over here, and we have another significant low over here. Now it simply means that all the lows or all these highs are insignificant, therefore they are not going to be protected. They're going to act as our internal liquidity. So here we have our internal liquidity, again internal liquidity, internal liquidity, and internal liquidity over here, internal liquidity over here, and internal liquidity over here, internal liquidity over here, internal liquidity over here, and also internal liquidity that we have over here. Okay, and we also have our protected lows. So this is going to be a protected low, a protected low. All these lows are going to be protected until the market runs out a significant low, and that is going to be a sign of a new trend that is forming. It's now going to be a downward trend. As you can see, this is an upward trend because we're having higher highs and higher lows. So the idea here is that you want the market to keep on taking out the internal liquidity. As you can see here, the market, it took out this internal liquidity, pushed to the upside, and then it gave us a reversal to the downside, tapped into this area over here. It tapped into this demand area over here, and then pushed to the upside. Okay, so the same thing happened. The market pushed to the downside, it took out the internal liquidity, it gave us a reversal, and then it reacted on this area over here. The market reacted on this area over here after taking out this liquidity that we can see over here. So there's some other kind of liquidity that we haven't talked about. So here it reacted on a demand area, also here it reacted on a demand area, and then the market pushed to the upside to take out the internal liquidity. So the market did the same thing. It gave us a retracement over here to the downside, and then it eventually reacted on this area over here, and then it started pushing to the upside. So we do have a mentorship program. At the moment we are not offering signals, we are only teaching people how to trade like professionals. So the things that you get in the mentorship are things like how to enter into trades. You get a risk management plan, you also get a trading plan, you also get a psychology lesson, you also get to have access to our 24-hour support, and we make sure that all our clients understand everything and that they reach their financial goals. So let's continue. As you can see here, we have a push to the upside. Here the market didn't react on anything, but then this time it reacted on this demand zone over here. It reacted on this demand zone over here, and then it pushed to the upside, and then it finally came to react on this last candle over here, or the sponsored candle, and then pushed to the upside. And then over here it took out liquidity, it reacted on this demand area, and then the same thing took place on the next impulsive move. So this is the end of the video, guys. This is how you know your internal liquidity and also your external liquidity, and I'm going to